Thank you very much. So I think the first thing is we'd just like to ask the panel to introduce themselves very, very briefly so we leave time for the rest for the questions. Perhaps we could start off at that end.
I'm Sudesh Giriar. I'm the Chief Operating Officer of Express Money. We are a global money transfer company. We operate in 165 countries. We pay out across 200,000 plus locations. We offer money transfers through omni-channels, cash remittances, account credits, mobile wallet credits, home deliveries, money moving on to ATM cards, and so on and so forth.
Thank you.
Very good afternoon to everyone. My name is Kuldeep. I'm from MEBIS and I look after customer experience function in the organization.
Hi, good afternoon. My name is Ibrahim Iqbal. I head the innovation in Dubai Islamic Bank. Has been with the bank since 2005 and looking after the innovation and transformation function for Dubai Islamic Bank.
Good afternoon, ladies and gentlemen. My name is Farhan Niaz. I'm the Global Head of Service Quality and Customer Experience for Abu Dhabi Islamic Bank.
Hi, good afternoon. Bhaskar Rangachari. I look after marketing, customer experience, brand, or 7 other stuff which the name card can't fit. Prior to Mashriq, where I've been for a year, I was with Standard Chartered in global country and region roles in Asia. And first time in the Middle East working rather than just living.
Good. Thank you very much, everybody. Let's start off with the first question. Customers are increasingly looking for personalized products that have a simple application and a one-click buying option. What are the financial sector doing to retain and gain more customers? Let's start off with you.
Yeah, thank you very much for the opportunity. I think today, when we look at the financial world, customer experience has become the core center of every organization in the financial world, including the banks as well. I think we all remember how this whole journey has moved from customer service to customer experience, and which is customer focused to customer-centric, and the new buzzword has been the customer experience for a time. We moved into the journey mappings and stuff, and I think now an extension of this customer experience is the happiness, the word happiness, which is now coming in. And that's where the organizations are moving towards, and that's how financial world is now trying to provide an experience which is more towards the happiness of a, if I may take 1 second and just share with you a very interesting experience. I was at Zeppos, probably one of the best organizations comes to customer experience, and their call center is pretty large, 20,000 calls a day, 200 customers, 200 agents. And they told me that there is a customer who called, he's a veteran, ex-veteran military guy, and he said, I want to buy a pair of shoes. During the conversation, he said, 4th of July, my son is asking for a gift, a PS3, probably I would not be able to get it. In short, in 3 days, he got a PS3, delivered at home. These are 10,000 calls coming a day, 300,000 calls coming. How this information reached from that agent, from one of the channels, to the decision maker, where the PS3, which he didn't even ask for, it reached him in 3 days. And that's the kind of experience and happiness that they're creating, which keeps the customer loyal.
Thank you. Very interesting. Perhaps we should also send everybody to Bhutan, where they measure happiness for the nation. Okay, can I ask the same question perhaps to Suresh?
Yeah, sure. Yeah, Nicholas, one-click option is certainly getting more and more popular. People want it very simple, straightforward. They don't want any complications anymore, right? By a click of a button, they would like to do so many things, be it bill payments, use various financial products, and the latest buzz is remittances, right? I mean, banks which were shying away from this business a few years back are today embracing the opportunity, tying up with players like us. Now, one of our partners, which is ADCB, has recently launched an app. Using that app, you can as well do money transfers. Let me just share some statistics with you for the benefit of those who don't know much about money transfers. Incidentally, UAE is the 3rd largest money transfer country in the world. Money transfer globally is worth $585 billion. The largest country in the world is US at $135 billion. Then comes Saudi at $45 billion. UAE is the 3rd largest at $33 billion. And the fact that 88% of the UAE population is expatriates offers a tremendous opportunity for banks to get into this area. I think the customers are constantly looking at ways and means of adopting, technology, and using those straightforward methods to do money transfers. especially the web browser or a mobile app to execute money transfer transactions. Yes, I agree with you, Nicholas, that people want simple, straightforward, one-click kind of solution.
Thank you. Perhaps we can turn to Ibrahim now and ask, in the age of digitization, mobile payments, cashless banking, they've been around, they're now reigning. How is the sector competing in this new world of customer-centric banking?
Okay, thanks a lot. We're living in exciting times with all kinds of buzzwords and all kinds of new fintechs to chatbots to artificial intelligence coming in. What hasn't changed is the customer's basic core needs. The way the customer experiences these needs keep changing, and they are changing with much more faster pace than they used to do earlier in 1980s or 90s. So what the banks and any other organization need to keep pace is how to deliver our products and services to the right people, to the right segment, in the way the customer is expecting. So one size fits all does not apply anymore. Now, how to understand these experiences, there are a number of ways and there are a number of means digital is providing, be it monitoring your social media profiles, to be it analytics, which allows you to see what patterns of transaction are happening, which portals, which apps are the customers using. These experiences are not one time, they keep changing. As soon as a new Apple version comes out, the customer experience of the companies are already working towards the next experience. So it is not anybody can claim that we have a positioning now and we have the best app in the market. It's a journey, it will keep going. The organizations need to be agile, the silos have to be broken. You need to be ready for continuous transformation. Anybody who thinks we've got it, I don't think so is on the right track.
So I think from what you were saying, you would argue that the investment has to keep on. It's not a one-off investment.
It is absolutely not a one-off. And the understanding, we know our customers, but our product designs and service designs are not necessarily geared towards customer. They have lots of other factors, from regulatory frameworks to internal costs to the systems we are living with to the people we have. So it's not a one-time thing, it's a continuous journey, and it has to be inside out.
Okay, thank you. Can I perhaps address the same question to you?
Sure. I think there are a couple of thoughts I'd like to start with. You know, banks, when I entered banking 20 odd years ago, it was very interesting for me coming from the outside world how protected and insulated bankers are. And when you talked about marketing, people said, why do I need to sell myself to the customer? The customer needs us. So the thought process generally was the customer needs us, not we need the customer. They don't have a choice. They want to park their money, they have to come to us. They want to borrow money, they have to come to us. So the whole DNAs of banking was about customers need us, not we need customers. Whereas if you had a retail shop and you opened a retail shop, you can actually have zero revenue with no one coming in.
True.
As a bank, there's no such thing as zero revenue. It's just that if you didn't manage your costs well, you don't make. Now because of that, the thought process of customer centricity was almost sold by the McKinseys and the Accentures and the Bain to the boards, but not necessarily operationalized. So when the pressure of digitization has come, a lot of banks address it by doing the front end. So what was called STP, straight through processing, we used to actually call it straight to person. There's an elf waiting there to receive that paper and quickly run over and stamp the paper and bring it back and put it through the box and pretend it's, you know. That's where we started as an industry, I mean, let's be honest. But as we moved along, what has made it possible for us to now make the leapfrog is the cost of technology. There was a time in '98, a chip card costed $6 against a regular plastic card, which was 50 cents. So which banker in his right mind would start putting out cards with chip? Today, on the other hand, the cost is negligible. So the first thing that's changed for banks is the ability to deploy technology at a much lower cost than its legacy, right? The second thing to compete, to make things customer-centric, now the customers have a benchmark, right? They benchmark us to every other service provider they have. Historically, the consultant reports would benchmark you to the hotels on service, and they would benchmark you to airlines. Today, you get benchmarked to Uber, you get benchmarked to Kareem's, you get benchmarked to Airbnb. Because what they're saying is, why is it only your front end is automated, but your back end still takes 3 days? I think this is where the sector is moving. Now the biggest part of investment is not just in the front end. It's actually, and it was on a panel yesterday with all the retail bank heads, it's actually to address that legacy core, and now for the first time actually look at saying, can we just get rid of it and replace with real technologies that give us the leapfrog, right? I think the sector is now competing by actually putting money where it matters. I think the sector is competing by understanding that customer centricity is no longer a choice, that you can have a bank that goes under. None of us are too big to fail to that extent. So I think that will drive the shift,
Okay.
the mental shift.
Thank you very much. Perhaps we can now turn to Kuldeep. Financial organizations are constantly multiplying digital touch points. We've been talking about the customer experience, etc. And because of that are also looking to enhance the customer journey. How do you see these digital touch points really helping to anticipate the customer needs as opposed to following on behind? And how can that help develop customer-centric products?
So I think there used to be a traditional approach when we used to design products sitting in a room inside our offices, and we used to say, we'll go out and sell the product to the market. Today, what's playing a really important role is, I'll see, is consumer psychology and consumer behavior. That's becoming more important, because it's not only us who are out in the market selling a banking product, but there are, like my colleague mentioned, there are other experiences which are going through, which are changing your perception day in and day out. So how do you capture that perception? So we are not the only one influencing the customer behavior. There are others who are influencing. And I'll pick an example from a recently, we all were talking about that how we all are integrating Touch ID into our mobile app, and that's a big feature because you can unlock your phone with a Touch ID. Now, suddenly, if you saw the new launch for iPhone X, the bar is changed. All of a sudden, if iPhone X is adopted by consumers, and which in all likelihood will be, your Face ID becomes a much stronger point, and that's how they have sold it. That your Touch ID was 1 in a 50,000 chance of failing. Your Face ID is 1 in a million. So suddenly your bar is raised. So I think as a banking organization, we got to keep pace with how each touch. That's a consumer experience. How each of these touch points experience is changing customer behavior, and how do we incorporate as part of our journey design process rather than sitting and thinking designing a product or a service. How you are capturing these moments and incorporating in your product design and journey design. So I'll say, we got to go maybe perhaps one step ahead. It's not only customer centricity, it's co-creation with the customer. So involve customers as part of your process. So okay. I think we're heading there.
Thank you.
If I may also
I'm just going to turn to you. How you say the thought process. Thank you.
I think it's an amazing opportunity when you have so many channels, and now you can listen to the customer on the spot. With social media, the emotion analytics has become very, very important. When somebody calls a call center and you can, through their voice, understand if they're happy or unhappy with you, or the sentiments are now coming through. Social media, somebody's sitting in the branch and saying, right now I'm here and the wait time, or I'm not happy with this and this person is not smiling. That's the kind of things that come across. In Adeep, we are looking at these kind of things. We're looking at the emotional, the sentiment analysis, and that drives, and whenever a new product is developed, you go into we go into what we call our Adeep, we have a workshop where we go and do the journey maps and develop all these products, and these emotions play important parts.
But isn't the emotional aspect an argument against the chatbot and the automation of artificial intelligence, or is it for artificial intelligence?
I think it's for. Both of them go hand in hand.
Okay, thank you. Perhaps we can then move on. Sudesh, the adage, customer is king, has never been more true, and we've just been hearing some of that. How are other financial organizations innovating? Which aspects of customer centricity are most important for the UAE market, do you think?
Yeah, actually, I think I'm the only non-banker sitting in this panel out here. So pardon me if I bring in the money transfer perspective again and again. Now, as I said earlier, I think this market was very slow from a banking perspective to start embracing the money transfer opportunity. But as I said a little while ago, we have seen that banks are more and more looking at partnerships. They're not looking at operators like us as competitors, right? A few years back, we saw one of the biggest banks here launching money transfers all on its own, right? They had this tie-up with some of the partners back in one of the South Asian countries. Then they expanded to a few countries. What some other banks did in the recent past was that, why should we reinvent the wheel? Why should we start building a network that will probably take years? For example, we have been in existence for the last 17 years. To be able to get to this level of 165 countries, multi-channels, etc., it has taken a lot of time. So the banks realized that rather than reinventing the wheel, let's go partner with somebody who has already done it. So that resulted in this very, very important partnership with ADCB last November. So what I'm basically talking about is, we have all understood that there is a customer need, and constantly, continuously, the customers are getting more and more savvier. During the olden days, we could never see a smartphone in the hands of a blue-collar guy. Today, virtually every blue-collar worker has a smartphone, which means that they're all getting savvier. And I was amazed to see the behavior of this particular segment in the last few years. Days are not far. Today, for example, now they're all on WhatsApp, they use Facebook, they use internet, and so on and so forth. So, which means that besides the white collar, there's this large segment of blue collar which is getting more and more savvier. When the customer segment is getting more and more savvier, you need to bring solution to the table. This is what we have tried doing. We have partnered with banks to be able to offer that solution to the customer.
Yeah. Perhaps turning to your neighbor. So if we take that customer is king, to what degree do you think it's convenience that's most important, or to what degree is it value-added services, particularly if we look at the UAE?
I'll say it's both. So because I don't think customers will trade convenience for if you're offering a value-add service, or a value-add service for a convenience. So I think whichever product you're designing or the service you're offering, customer is looking for both, that whether it fits into my lifestyle, end of the day, that's adding value to me, and is it convenient or not? Because if it's not convenient, I'll not go for it. So I think it goes hand in hand. You can't just pick one or the other.
You're nodding. You agree with that?
See, one thing we have to remember, don't take digital as this fancy proposition. If it delivers in a gamification and it looks very jazzy, customers is not a fool. He's a king, remember. And a king is pretty smart. So he knows the value he's getting out of a very funky digital branch or a very funky digital app, and what he's not getting. So I would never take customer for granted. So I would say there is definitely more emphasis on value, delivered in the most convenient and most digital savvy way. Why? Because you're talking about 50 million GCC population who are in the youth, who don't want to bank in the traditional way, the way the bankers have been giving these services. Now, if you want to tap into this market, they would not come and understand the value, they would understand the convenience first. But then there is the high net worth and the people who really make the bankers money, who definitely know the value and who would not bank with you if you give a very funky, jazzy app. Yeah. So it is a very important understanding that which customer are we dealing with, which segment, what age group, what are their actual expectations from what we understand, and then accordingly position products, services, value versus convenience. Not everybody wants a jazzy app, and not everybody wants a very high value transaction services as well.
Yeah. May I add to that? I think I'd agree. I think innovations that matter to the customer is what matters. Innovations that are gimmicks, which make our own stakeholders and internal bosses happy, we have to be the voice of the customer to say, you know what, that's just a gimmick. We're going to spend 6 months of time doing a gimmick. Let's not waste it. The customer is not stupid. I'm being a little more blunt than the king is smart, saying the king is not stupid. Because the customer, the most things today's customer hates is, what do they have? They have information on their hands. They can search just about anything. For those of you who have children, you'll know, you talk to your kids and the number of times they go on Google and answer you back with a more factual answer, you realize how much they know and how much you don't. The second thing is, even for us at Mashriq, Abdulaziz Al Ghurair, who's been the CEO for the last almost 30 years, he's very driven on innovation. But the one thing he always said is, go ahead and try fast and fail fast. We will try 100 things, 90 might fail.
Yeah.
That's okay. I mean, we launched branches with absolutely no people. We put them in the perfect location that a marketer would say is good, which is a subway station. How much better can you get? And yet, when we go there, we could pretty much, if we find a human being, I'll give them a gift because customers are not using. So customers also recognize what's a gimmick, what's real. So to your question, I'd say they want convenience in the transactions that matter. For example, I want to quickly remit money. Let me take out my phone, do it. I want to transfer money, do it. I want to pay a bill. I want convenience there. But when I want to invest my money, when I want to plan for transference of my wealth to my children, I'm not looking at convenience. I'm looking at the value add of the quality of advice. I'm looking at that investment counselor who can give me. And there, I'm not looking for him to show me a jazzy game. I'm looking for him to give me real high quality expert advice.
So it depends very much on the situation. It depends
and
very
the
much
need.
on the customer's need.
And someone buying a home, for example, yes, we all start by looking at a mortgage rate, but often we actually take the mortgage with the person who makes us feel most comfortable, that we understand the terms, we understand the requirements, we understand our alternatives. So there are areas where price matters, there are areas where convenience matters, but definitely the core of banking, which is really advisory, is still a human touch business, right? There it's not about gimmicks.
Yeah. Just perhaps going on, and that leads on perhaps very well to the next question. That is in terms of acquiring customers and then keeping them. We talked about what the young are looking for. We talked about mortgages, which are clearly a long-term or relatively long-term relationship normally. How do you think this shift in strategy to acquiring customers, creating loyal customers that are going to stay with you, should be at the heart of a customer-centric strategy? And how do you think you can start measuring that and benchmarking that? Perhaps we can.
Sure. I think to me, the most important thing is you understand the customer, you get to know what they're talking about, you communicate with them, and measuring tells you if you have been successful or not. And that's one indicator that tells you if you're going in the right direction or your movement is. And as you said, it's a learning experience. Sure. There are many indicators that many organizations have. For us, for example, in Adib, for us, there are 2 or 3 different indicators which are very critical. One, NPS is a very important indicator, is customer experience net promoter score. This is a loyalty matrix. It tells me the loyalty of a customer with the organization. Tells me the promoters and the detractors, so you can concentrate on your promoters and see what they like about you. You can look at the detractors and see why are they have a possibility of detracting. At the same time, the retention element is very important. You need to understand your retention number. And the third one important for me would be the lifetime value of a customer. The value, the time that they spend with you, the value that they bring into your organization. 2, 3 different very important.
But the time they spend with you, is that equal to the value? Or are they spending so much time that they're taking up more or too much of your time? And you should be just telling them to talk to a chatbot.
Yeah, no. I think the more time they spend with us, the more we understand them, the more we can provide them what they are looking for.
Yeah.
So if I may add on that, if you ask me in a very traditional way, how do you measure customer loyalty? And I can give a very clear, simple answer that Net Promoter Score still is one of the most famous indicators. We do track that. Customer effort score, again, another indicator, how much effort customer takes in taking our products or services, how difficult or easy it is, we try to track that also. But if you again think from a customer perspective, it's not only one number or one indicator which is making up that experience. I think, and as an organization, we also have like variety of indicators when it comes. It's the number of products you're buying from us. It's the business is growing or not with us. It's the customer sentiment in terms of how you're interacting with the call center. It's the social media, what you're talking there. So what we recently attempted, and it's again as part of a journey, I'll say, so defining something we call a sentiment score, so which is an aggregation of all the things customer is doing with you, and what is customer talking about you, and perhaps a mix of these tells us pretty much in real time how is the customer sentiment, and if the sentiment changes pretty much overnight, then we can immediately go back and ask what really went wrong, and we can dig into the information. I think we got to move into more sophisticated ways of aggregating all the customer information and then perhaps taking decisions as an organization.
And perhaps also differentiating depending on your customer base.
Exactly.
The way you're measuring your customers is perhaps accurate for certain sorts, and others may be very different. The multimillionaire will express himself and needs to be measured differently to the teenager.
Exactly.
And I think, to add, the shift in strategy as you asked the question, in the old days of banking, all your focus was on acquisition. Because once you got him in, the exit was so difficult, it was like a one-way street, right? So then it made it that you've got him, so frankly, exit was difficult. So the whole business of banking has always focused on acquisition.
True.
Loyalty was almost seen as oh hell, we have to do it anyway, so let's throw some points at him, let's throw a points program, let's call him loyal. And to be honest, most banks introduced NPS also almost grudgingly, right? To say, let's just introduce it because the chairman wants to know what's our NPS. And let's just put it out there and say our NPS. And often NPS was misunderstood by just the absolute number. Oh, we're at 60 now. Oh my God, we're at 40. Oh, we're at 20, it's disaster. Rather than the shift in the promoters and detractors, right? Because the more neutrals you have, that's not so good. You want either people to take a call, either they're with you or against you kind of view. So the first is the strategy today in banking is no longer just about acquiring, because the exit is actually possible quite easily. Digitization has made it possible for a customer to literally issue an instruction online to move all his money to bank B, and you'll do it. In the past, he had to come to the branch, wait in a queue, write a check. The measurements, as you said, the other piece I'd like to add to what you just said. The external measurements are sentiments, right? Whether it's social media sentiment, NPS, customer satisfaction surveys. The internal is a bit of what your CEO will tell you, show me the money.
Yeah.
Let's actually see our own behavioral data. Are we seeing spend trends go down? Is that in line with market? Are we seeing certain behavioral trends which should alarm us? Because a silent attrition on a portfolio of a customer is usually a multi-product customer. The silent attrition always starts from he stops spending on the card.
True.
Before his mortgage goes. Now these are data points that all of us are having, but not necessarily connecting the dots. So as an example in Mashruq, one of the things we did, you take the NPS of say a Mashruq Gold customer, you know where the sentiment is. Now you start looking at the portfolio and you go, if Gold customers are starting to spend less on the credit card, that's an early warning indicator, right? So the way you bring it together tells you whether you're becoming customer-centric or not.
Okay. But then taking that one stage further, with all these customer channels, apparently that are very customer-centric, how are you managing to ensure that you don't lose customer understanding? Because you think you understand the customer, you hope you understand the customer. What are you doing to actually ensure you do understand the customer? Perhaps we can ask you the question first.
Yeah, I think it's all about communication. Now, what efforts banks have started making is listening to the customer.
Yeah.
The more you understand them, the more you will be able to understand their grievances, what they like, what they don't like, and you can create your strategies accordingly. That's why these indicators are also important. Listening to them, talking to them. I think whenever we now design that's why we call it a journey mapping. Whenever you pick up something and you design a journey, you put yourself in the shoes of a customer and see, what am I looking for? If I'm going to a bank, how often do I want them to talk to me? How often do I want, every time I do a transaction, do I get an SMS telling me? I go and apply for something, how often do they come back and tell me, which stage your product or your requirement is at? So understanding, listening, communicating with the customers are very, very important.
But surely you also need to listen in different ways depending on your type of customer.
Yeah.
Sure.
I mean, how would you change the way in which you listen to your customer depending on the type of customer, based on their assets, based on their age? Because you can have people with a lot of assets who are quite young. You can have people with no assets who are quite old. How do you do that?
So I think again you can't use the old segmentation which you used to have, that categorize customer into one segment, that this is the segment we want to deal with in a particular way. Well, like you rightly said, each segment has got a set of customers who are behaving differently. So what emerging out is that there are customer personas which exist today. So in each segment or in each pool of customers, each customer is not same, but there are definitely, you can identify these personalities who pretty much might behave in similar way, and you got to connect with them in a different manner. So there will still be, I'll talk about traditional businessmen sitting out in your SME pool who would like to connect one-on-one. So you really shouldn't have a connection one-on-one with them where you meet them, interact with them and get their feedback and walk back. So that channel got to be there. To an extent that, there are, again, people sitting out there who don't want to come one-on-one, but there's an online community out there. So create communities for them to share their experiences. So much investment is required on perhaps online communities there. So I think it's based on where your customer is, how they want to connect with you. I think we got to create those channels out there.
Okay, thank you. You've not been working enough right at the end there. Okay, so Suresh, we talked about the touch points, we talked about how we try to provide an enhanced omni-channel experience. We hear a lot more about omni-channels these days. What's your view on how you stand in your customer's shoes, particularly as you perhaps serve a number of customers that are not actually in the banks? How do you do that, and how do you make sure you are adapting as their expectations change?
Sure. Actually, I'll look at it. I'll take this in two parts. I will address it in two parts. In money transfer, we have the send side of the business, and then we have the receive side of the business. For example, now, for a long time, we have been a very strong brick and mortar player driving the business through the location, the agent location, be it banks, non-banking financial corporations, and so on and so forth. But in the last few years, we have also seen that there is a strong emerging digital customer base, right? For example, if you look at markets like US, Canada, UK, Europe, Australia, there's a very large segment of customers who have been using the digital channel for money transfer. Now, currently, if you look at the situation, 6% of the global remittances is done through the digital channel. It's a very small number according to me. But then there is a prediction that by 2025, this percentage will move to something like 35%. So we are all, we all need to gear up because this is happening all across the globe. In the Middle East also, we'll see this happening. More and more customers will use the digital channels to source transactions, money transfer transactions. On the receive side of the business, we have had several instances where we had to look at it completely from a customer perspective. For example, market like Vietnam, it was a revelation, so to say. Years back, when we were sending remittances from a market like Cyprus, there are a lot of Vietnamese in Cyprus. We believed that a Vietnamese beneficiary back in Vietnam would accept VND, the Vietnamese dong, as the payout currency. But we got to know that he wants the same currency which his remitter paid in. For example, the remitter paid in euro on the Cyprus side. The beneficiary also wanted it in euro. So it was a euro to euro kind of a transaction. Same thing happened when a transaction originated from Great Britain. So GBP. So today, compared to just one currency payout, which was VND, the local currency in Vietnam, we have 6 currencies payout. This is a unique country where we have multiple currency payouts. We do it in VND, we do it in USD, GBP, Euro, Australian dollar, and Canadian dollar. This is one of the examples. The other example is a few years back, looking at the Indian market, we got to know that there are customers who want money to go on to prepaid cards. So we tied up with 2 large banks in India to offer this service. We also came across a channel that was looking at cardless ATM transactions. This is something which my banking friends probably will not like. Cardless ATM transactions, they would like to know what it is. See, there is a solution provider in Europe, a very famous solution provider called Hala Cash. They have this technology where you can walk to an ATM, and using a few codes, you can pull out cash. We partnered with one of the largest Indian banks, right? Right after the remitter draws the transaction, you send across a few messages to the beneficiary, and then he uses those codes, messages, and he also puts in his mobile number and the amount, then he walks away with the cash, right? These were all done keeping in mind the customer requirement. Countries like Vietnam, Philippines, Pakistan, Egypt are, they have customers who want money to be delivered at their doorstep. So we have that service today where money is delivered at the doorstep.
Thank you.
All driven by customer requirement.
That's very interesting. So, and obviously you also have a lot of information about who is living where. So the Vietnamese are living in Cyprus, etc. Sorry, you wanted to add something.
I do want to invite Sudesh to become my customer because I can give you cardless cash here. Since
Okay.
2000.
So I think we
I
only
think this is a very important point. A lot of these services in UAE market have been there for a while. DIB has had this service for 3 years. But what is happening is with these digital overload, if I may ask you, if you use an app, how many features do you know in that app? You probably know a few of them.
Exactly.
So what is most important is not only to understand what the customer wants, also to be able to make sure that he is coached about it. We did some analysis just to build on the remittance point. 98% of UAE population, including the blue collar, has the mobile phones. So it seems very exciting that this mobile phone penetration is phenomenal. Guess how much is the mobile banking user? 30%.
Yeah.
Now, of that mobile banking user, guess how much is the white collar or the blue collar using it? Now, when we tried to enter this market and we did a study in this, we realized that yes, they do have these nice smartphones, but guess what they are using it for? Definitely not mobile banking to send payments.
No.
This is their private space to be able to talk to family, Facebook, chat. So there is a company which actually went down to the labor camps, stayed there, positioned, and this was a company which was doing some research in payments. They actually had people planted in the camps and say, they have the phones, why don't they use them? They said they will never use the phones.
But I think it's a bit like the washing machine.
Yeah, how many
The
buttons?
washing machine has so many buttons. How many buttons do you really know that work?
So it
You
is
want to
long
be
as
careful,
it's
it might
pushes
shoot you out to space.
Okay, I think we're almost running out of time, and so I have a special offer for the audience, and it's free of charge. You're entitled to consult and ask questions to the panel. So who has got a question for the panel? And we won't charge you for the consultation.
An offer hard to resist, ladies and gentlemen. If you have a question, please raise your hand.
Don't feel shy.
Give us your name, your company, and your question.
Hi. So my name is Zaid Shama. I'm from IBM. So my question is, are you seeing customers looking for goal-based investing? Are we seeing this trend of goal-based investing happening in this part of the world?
Sorry, robo-investing?
Did you say robo?
Are you talking about robo?
Goal.
Goal-based.
Goal-based.
Who would like to say that?
I'll take that. You see,
Goal-based.
when we were talking about segments and we were talking about understanding, every segment has a different way of deciding investment models. If there is a high net worth individual, the only goal he has is to make sure that it makes him the most amount of money. So obviously the rate becomes very important. But if you go to a different segment, the personal financial management and advisory is becoming very popular in the millennial side. People would actually sit on these games and on these devices to actually plan, okay, I'd like to go for a vacation and I like a monthly savings plan. But important thing in this is this not the app which offers you a goal and then you're putting money from your own account into that goal. Anybody can do that. What does the financial institution add to this goal is the key, the value part. How do you help him achieve that goal? If it's a saving plan, debit your account, put it into a saving product, that's not the actual goal. So yes, it is getting traction, but it is not picking up. Reason being that the products behind it are not competing enough, are not you can say exciting enough for the goal-based investor to be able to go into this. At the same time, the goal-based investment is also using from risk profiling perspective. So if I have some money, but I don't want to take huge risks, I'd like to only invest in, let's say, local Emirati businesses. So that is again becomes a goal and an investment model. So it is picking up. There are a lot of fintechs which are offering products around this, but the core objective is if the back-end product does not give you the value you need, it again becomes a nice wrapper.
Okay.
Yeah, I was just going to add to that when it's a goal like, oh, I want to buy the new iPhone, so then save. There are banks even in Singapore that did this. You are supposed to transfer your money every month. After a while, you think, so what? I can just flippantly go and buy that iPhone anywhere on my credit card and charge it. Yeah. Whereas the moment goal-based investing comes into money management, as in your wealth, it actually becomes powerful because it allows you to for example, as a money manager, know that every quarter you are spending this much on these things. Had you done it slightly differently, you would have been better off by Y. And that's where they want it, because that leads to the next advisory conversation where needed, or to say, my goals have shifted a bit. You know, now my children are grown up, so now I want to plan for something else, right? So that goal-based investing, I think, works more on the asset side of your personal balance sheet rather than the loans.
Thank you. Well, I'd like to thank all of you for being here with me.
It seems this.
Sorry, there's another question.
Nicholas, my
Yeah,
apologies.
we
We have time for
but-
one final. We've got about a minute to ask
Right.
and reply. So good luck, gentlemen.
Good afternoon, gentlemen. My name is Safdar Hussain, doctorate in artificial intelligence at Indian Institute of Technology. My question comes when we're talking about the customer experience, customer-centric. One thing I have missed out is that even the employees of each of your bank are customers. I hardly see asking those employees what their experience is all about their own banks or something like that. For example, if I was just checking all the 4 banks, few people while I was interviewing my research and everything, whenever one of your employees off-boards or leaves the organization, it so happens that they have been forced to submit all the personal loans. They have asked to surrender the credit cards of their own banks and close their auto loans and then exit from that organization. And that particular employee goes off to either it's banking or any other segment and talks about, no, this is what the experience was all about or something. That was my first question. Sorry, the second question is, the segmentation part has been touched based on 2-3 occasions. I still see that all the 4 banks, the panelists who are here, have segmented based on the income. If I have to see a CASA account, it's based on 15,000 dirhams, for example, that there is one segment, 15 to 25, 30K, there's one segment, 35 to 40K, without even looking at whether a 35K would be using the credit card, the same kind of value that we'd be getting out of a 10K versus 15K versus 50K. I still see those on the website, maybe all the 4 websites I checked in, I found these 2 are my questions. Segmentation is still being defined against income parameter, and employees are not being still considered as your customer-centric or experience. These are my 2 questions.
Well, I think with the questions, you've almost taken up all the time we had, but let's try at least to partially answer something. Would you like to?
Maybe I'll give you a very quick answer. I think with employees, probably banks approached it the same way as they approached customers, which is make the exit difficult. Okay, that was the wrong approach, and I think many banks today, and I'm sure I speak for some of my colleagues here, actually have employee programs where their loans get converted into commercial loans, where the employee chooses. And often what you find is the employee prefers to go and shop for that commercial loan and potentially get a better price. Sometimes it's also because banking is an incestuous industry. Bankers typically move to another bank. So inevitably the new bank's employee benefit will benefit them. That's one. What you talked about segmentation, what you see in the public domain is this income-based. However, actually at a portfolio level, we are constantly analyzing behavior-based. So to me, a credit card customer who spends $1 million a year is potentially more valuable than a Mashra Gold customer who keeps 350,000 minimum balance, right? So that degree of segmentation and targeting happens more on how we manage the existing customer once they come on board on a behavioral-based segmentation.
And I'll give you a concept into a very different...
Very quickly,
yeah. Very, very new one. You know, something that you don't see. Now the banks are going beyond the existing customer and they're looking at the future generation. The Gen Y is the segment that you're looking at. It's not based on income. It's not based on, but this is a generation which is going to define your future, how your products are going to be. And that's what most banks, and Nadeep especially, we are working on the Gen Y concept.
It's not based on hair length either.
It's absolutely not.
Right.
That is he wins.
So I think apparently we have one further question we just need to get through.
It's clearly the festive period, Nicholas. So we've got one more.
One more, okay.
Hi, good afternoon. I'm Ankur Sharma from Commercial Bank of Dubai. My question on segmentation is segmentation overrated in a banking arena, or is it actually the moments which define the customer? Because there have been a lot of talks about psychographic segmentation, attitudinal, behavioral segmentation. How much is it actually pertinent from a client engagement and customer experience management perspective?
Who wants to answer that one?
Okay. You see, as my colleague answered, there are two parts of segmentation. There's a visible segmentation, and there is a segmentation which is continuously being done based on analytics, based on the product positioning and the development. Now, segmentations are important because even the regulatory framework that we operate in, which allows a particular set of credit rules to be applied, is based on your income. And there are certain calculations which all the banks have to comply to make sure that you are not over-debted. And those require the customer's communication to be able to tell you that this is your salary, this is what you're entitled with, and that's how much you can get. But at the same time, on the service side and on the product bundling, there is continuous analysis of Gen Y, the requirements, the behavioral, looking at the population mix, looking at Emirati as a segment versus expats as a segment. These things help and tailor the experiences and the customer product development. In a branch, when you go, when we are training people, we need to know how many people who walk in will speak English, will speak Arabic, who do you need to deal with. So there is much more than what you see on the websites for assets under management in the segmentation. The training programs, the design of the brochures, all of these are based on the profiling as well as the demands of the customer and the mix we have. We all have different customer mix, and they play a very key role.
Okay, thank you very much. I think we really need to stop there. Thank you, all the panel, for that. I think we can thank them for their time and their efforts. And thank you for listening to us.